Good morning, trading world. Today is May 19th, 2022, and this is my pre-market outlook and technical analysis for day trading the SPY. I know it has been beat to death, but the debacle by Walmart and Target further shows the market has not priced in a recession. Furthermore, we are headed for what's called a structural bear market. And as quoted from cmcmarkets.com, a structural bear market is associated with stock market bubbles and imbalances within the economy. An example of a structural bear market would be the 2007 to 2009 global financial crisis. These types of bear markets are usually linked to banking crisis, where they overextend debt loans to individuals. A structural bear market tends to last the longest, with an average length of 3.3 years and recovery time of 9.2 years. So, looking back on a 10-year monthly, going back to the COVID lows right here, everything after that, all the way up to this point, is your Fed-induced bubble. So when it comes to a structural bear market, we're going to give back pretty much most, if not all, of this bubble at some point. And it appears that we're just about halfway there. But keep in mind that we had already seen a bull market spanning back six or 7 years before COVID. So a week ago, I think it was a week, a lot of people kind of asked what were my long-term thoughts on the market. Again, this is why I keep repeating the fact that this is only the beginning. This is the start of something that we're going to be in for quite a while. Because even before COVID, we had spanned it, almost 7 years in a bull market without much of a pullback. We got some pullbacks and corrections. We got a correction in there. But then we just kind of hit the turbo button here and created this super huge bubble that has to be burst. And this is the unwinding of that bubble. When it comes to today, do not jump in and sell the lows. Please wait for a bounce. I have seen many traders destroyed selling lows. In fact, that's usually the number one rule as a trader. Do not sell the lows. Do not buy the highs. I talked about how this would play out in a pre-market outlook last week. The way that I was seeing that this should line up, I think it's actually here. I know I've said it. I was looking for certain things to kind of fall in place, and we would get a little bit of it here, a little bit of it there, but it's finally all seeming to come together. But it should line up where we test the lows and push a little lower, maybe this afternoon and a little bit into Friday morning. But Friday should begin a short covering rally that bounces almost like a blow off top. And at the end of Friday, no one is going to want to hold on to any type of directional bias position through that weekend or through this weekend. And because of that, there's going to be a huge air pocket left where there's not going to be a lot of liquidity. And because of that, we're going to wake up on Monday to probably one of the biggest gap downs we've seen in recent times. And that will probably kick off the market breakers. They have these breakers or rules that if the market goes down or sells off more than or at 7%, they can stop the market. But if it happens within the last hour of the day, there's no market breaker. It can sell off and keep selling into oblivion. So I've been looking for a day like that, and I'm thinking Monday and Tuesday of next week could probably be that day. All right, give me a moment to bring up the key levels to watch for today. All right, here we go with the key levels to watch for today. Starting on the resistance side. Jack resistance will be at 389 to the 390 area. Queen resistance is going to be 391 to the 393 area. And then king resistance is going to be 398 to the 409 area. This 391 to 393 is going to hold a whole lot of weight today. We may not make it through or past that level today before we roll over. On the support side, the Jack support is going to be 385 to the 384 area. Queen support is going to be 382 to the 380 area. And King support is 379 to the 376 area. A very important level that should be marked on the chart today is the 391 level. And let me go back and make sure that 391 level. So around 391, I'm going to put the red line there, as that represents the lower end of the market maker's expected move. And pretty much at the same level, 391.86 represents the previous close. Remember, I spoke about the professional money managers having to do dynamic hedging once we broke below and broke off of this 391 area. And I gave you guidelines to kind of look at. If you follow things on a minute by minute basis, you'll be able to see the spike in volume when we get ready to break off of that 391 level. And you'll see it in the form of volume or bear volume spiking to the tune of maybe or over 7,000 or 8,000 contracts per minute. That would be somewhat of a signal that we're getting ready to break below and break free of that 391 area where professional money managers have to start to dynamically hedge portfolios. And on the lower end of this expected move, that means they start selling into the selling that's going on, further intensifying the sales activity. This is also the point where we start to get that panic or capitulation type moment somewhere below it, but it has to happen below that level of 391. Because as we get further and further away, the more attention it will catch, to where you will have retail people or clients of the brokers or these professional money managers calling in redemptions, meaning get me out at now. Whatever the price is, I just want to be out now. That's what I've been waiting to see. And that shows up as that panic activity. And once we get the first wave of that, I believe then we can kind of call what would be the temporary bottom to the first leg. Because it doesn't just happen all in one stroke. We're going to have at least 4 legs to this bear market. So this is one of the things that I'll be looking for today, but I don't really see that full capitulation moment happening until maybe next week, where we get one of those crazy down days where it's just panicked. And if you watch CNBC, you'll see the panic and discomfort from everybody on the network as they try to, make up excuses as to why or what's going on. But this line is going to be very important today. Now, even though I've said all of that, the main thesis is still bullish, closing above the 391.86 with a projected target high of between 395 and 400. The alternate thesis is bearish, closing below 391.86 with a projected target or low of 382 to 376. The current channel we're in is 397 to all the way down to 379. Be aware of the bear market behavior, so the alternate thesis could be more explosive as we inch closer to panic selling and the VIX approaches 34. Remember, when the VIX hits above 30, we get those days where it feels like two different day structures in one. We could start off with a downtrend day, and then the second half of the day itself feels like an uptrend day. So be aware of that. All right, here we go with our first scenario of the day. It was a very hard decision or toss-up between the expansive range day structure in which I have and downtrend day structure, which are going to be very close, and you have to pay very close attention to differentiate between the two. But since we are so close to the market maker's expected move, it is a great possibility that we kind of get sucked up and above that market maker's move. But I don't think we will come from within that magnetic draw or get high enough away from it that we're truly away from coming back through it. So the first or highest probability scenario today is going to be our expansive range day structure. It's pretty much where we come into the cash open, and we're going to get a cross above that previous close and close above it. And when we close above it, either at the 391, we'll say the queen, possibly around that queen resistance area. However, it is possible that we could see us fly all the way back up to the king, just below that king resistance area. But we're going to get that cross and close above the previous close, making this the expansive range day structure. But the draw of that market maker's expected move line is just going to be too strong, and we're not going to be able to get away from it, pulling us back down at some point today. And we're going to visit either the jack or queen support level, and possibly even lower. But that's the first scenario. And remember, the difference between that expansive range day structure and the downtrend day is the actual cross and close above the previous close. So that is the first scenario. All right, the next scenario is going to be our rounded reversal day type structure. We could get a continued push higher toward the queen or king resistance area and find midday chop around either that queen or king resistance before spending the same energy that we use going up to come back down the second half of the day. So the scenarios are all closely, the probabilities of all the scenarios are very close today. But this happens assuming we break above before the cash open or right at the cash opening, continue going toward that queen or king resistance area. So that's the second scenario, our rounded reversal day type structure. And here we go with the last scenario, which is our trend day down structure, meaning we open, gap down, and start with a rally back towards that previous close. And as you can see, we've already come back a good ways this morning pre-market towards that previous close right here, represented by the blue line. And we find resistance on or before that previous close, then begin the downtrend for the morning. And that would be our golden window right here. So there's going to be a lot of focus on what happens right here at that 391 level. Remember, this is the previous close, and it's also so very close to the market maker's expected move that there's going to be a lot going on at that level. So we're looking to see what happens at this level due to the market maker's expected move being so close. That kind of won out the expansive range day structure, because for some reason this line has like a magnetic draw to it. Whenever you get close to it, it will pull you up into it or suck you down into it. So that's going to be an important thing to watch this morning. As always, it is of extreme importance that you understand and know your risk right now. Because this is one of those days where we can start in one place, be up, on the S&P itself, we could start one place, be 100 points up at some point from that place, and then in the same day be 100 points down from that place where we started. So you have to get used to seeing these extremes when you see the VIX approach 34 and above. And to top it off, we have a gap in internals, which makes the market kind of crazy in itself. So you just have to be very, very careful right now. I hope this helps. Forgive me if I started off with some extreme gloom, but I like to prepare for the worst. But it is possible, that we could get that, a lighter than normal capitulation. But again, I like to know the worst option so that I can be prepared for it. So with that being said, again, I hope this helps. Wishing you a positive trading day. Have a great one.